G'day traders, Stacey Burke from Stacey Burke Trading, and today we're just going to be going over some stuff about the opens of the markets and the relationship that the banks have to the Forex market, just so there's a bit clearer understanding about how much volume is controlled by commercials and banks and governments, etc., and really how that relates to the three major time frames that the Forex market trades in. So as you can see, I'm just looking at a Wikipedia page that I just Googled Forex trading banks, and if you scroll down, at the beginning, you'll see that it gives you a little bit of a breakdown about the Forex market and how it came to being. But we'll just go down to the top 10 currency trading banks, and you can see this is up to May 2016 according to this page. And it gives a percentage breakdown of how much involvement the banks have. And if you do some simple math, you can see that that roughly adds up to 20, 35, 41, 51, 60 to 65% or more of the trading is done by banks. And you can see that 30% is done by 30 to 40% of that is done by those first 3 to 4 banks. Now, why is that important? Well, we're going to go over that in a second. So when we go to our chart here, I've got the pink, the yellow, and the blue, and largely what that represents is approximately the time that Asia opens up. The yellow is approximately when Frankfurt and London come on board, and then of course the blue is where New York comes on board. And what I'm just going to hypothesize to you is that why these are the most important time frames to trade and how that relationship of the banks is important to these time frames. Now, the banks will come on board and they need to either move the market to build a position or to exit a position. Now, they have order flow that for many reasons, global commerce, every day they have money that they need to move for clients, for customers, there's institutions, there's corporations, there's governments, and of course there's retail traders. But largely the banks need to move significant volume. So when we see these price movements on the chart, that's not myself, the small trader, that's big money moving in and out of the market, and most of that, as we just witnessed, is 60 to 70% of that is from the banks. So what we're looking for are opportunities where when the banks start to either build a position, we want to be on board with the smart money. Now, these time frames are just giving you a little bit of a visual effect of when the banks come on board, how those movements can occur. Now, Asia is usually the smallest liquid volume, but oftentimes the banks will enter into the market during Asia if they need to build or exit a very large position. But you can see significantly that London is traditionally the highest volume opportunity times. And just looking at the British pound, you can see that on this particular day, the movements took place. But what's important is that we see a couple things. One is that Asia, obviously, they were able to build a short position, and then the market went sideways. But that position continued to move as London came on board. Now, we saw some degree possibly of profit taking, but the market auctioned off again significantly into the US Open, and when the American banks came on board, they were able to continue that as well. Now, there's another important time frame. Now, this first few hours of New York, towards the 3-4 hours into that US session, is when London banks will be closing their book of business, and there's also the London close effect. So again, we've got the opens of Asia, the closing of Asia, and the opening of Europe. Then we've got the opening of New York, and then the closing of London. So again, these are important time frames for you as a trader to be aware of. And one of the other things that is important for you to be aware of as well is just the important data that's being released for the week. Now, in this particular page, I just have clicked on the Forex Factory Calendar, and this shows me just the high impact news announcements for the week. and the time that they will be released at. This is New York Eastern Standard Time. So again, if we just scroll through to the next day, you can see again there was a bit of pre-market activity as New Zealand and Asia opened up, and then significant move. The market auctioned into the just into the London Open. Again, another big push. The market made a second push attempt to that high and then into the New York Open, reversed and went the other direction. So you need to be aware that the banks are going to come to work in Asia. They're going to come to work in London, and the Asian banks are now going to be exiting. The London banks are going to be accumulating positions and then possibly exiting them. And as New York comes on board, they're going to want to move the market, and they're either going to be continuing that move or they're going to be trying to reverse it and seeking order flow on the other side. Again, we go to the next day, we see Asia open up, and we see that market continue to push. Then we auction into the London Open, where the banks again build a position and then push it into the other direction. We see New York, London traders possibly exiting into the Open of New York. New York trading building a position and then a big push. London traders exiting and either profit taking or building a new position in the other direction. So again, we see 1, 2, 3 big moves. Go to the next day, we see Asia accumulate a position. We see London reverse that and then build a new position and make a drive. Then we see quite a bit of volatility into New York. This was it was a payrolls day, so we see quite a bit of volatility reversing all of the positions from Asia and London and then running it through to the other side again. Next day we see traders being taken down into lows. The banks build a position, move it up into the London Open. London banks come on board, and we see that market drive heavily south. Profit taking, reversal, new positions into New York, and again volatility. So however you're trading, this is a 5-minute chart. It doesn't matter. You can use a 1-hour chart. But what's important is that you're aware that these 3 time frames look for significant movement to take place when these banks are coming into the market, when they're leaving the market and new banks are coming on board, and then again when they're exiting for the close of their session, as with Asia and the London Open, the New York Open, and then the London close. Hopefully this helps, traders. Again, do your homework, study your instrument, know that these time frames are relevant to the instrument that you're trading. If you're in a winning position in your trading intraday, know that when these rollover times occur for the new banks to come on board and a new market opens up, that we could see a potential change in direction. So look for those changes on your trading, and hopefully that helps, traders. Manage the downside, stay focused, stay disciplined, and may the markets go with you. Thanks, traders. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.